we've had a bit of time to think about the tariff worry, but now that it is a reality, investors are looking at all the possible parts of the economy that could get hit. We talked in our newscast about auto stocks, so the U.S. futures are currently pointing to a negative start. And while there's all sorts of questions about whether or not this will lead to a Canadian recession and how our Bank of Canada will have to navigate cooling growth with the threat of inflation from tariffs. Another developing story today, because you did see that weakness in the U.S. stock market yesterday, and we were mentioning the U.S. futures are weak this morning. There is a growing expectation that the economic risk for the U.S. will lead to a number of rate cuts by the U.S. Federal Reserve this year. So there's a lot to unpack, and we're going to be covering it from every aspect over the course of the morning. We want to kick off our coverage this hour with Sadiq Adatia. He's Chief Investment Officer at BMO Global Asset Management and one of our regular guests here on BNN Bloomberg. Sadiq, it's great to see you. What was your reaction to the tariff news?
I'm not surprised. I think, we were all expecting that as a deferral was occurring, it was giving time for Canada to do something that Trump wanted. But I don't think in the end, Trump has a final plan as to exactly what he actually wants from Canada and Mexico. He definitely wants manufacturing to move to the U.S. He wants Canada to be a lot more pricier so that the U.S. can be more competitive. And then obviously there's that drug issue as well, too, which I actually don't think is a big issue in Canada, but it has made it a bigger issue across, both Canada and Mexico. So I'm not surprised by it. The key here is going to be how long will this last? Will Canada be able to, bring this tariff down over time? And will some of that tariff still remain, whether it's on certain segments of the market? Hopefully not on energy, because that's a big part of what we send to the U.S. So I think this is, expected, but surprised of the magnitude and surprised that we're getting hit harder than China is. And
now that the tariffs become implemented, resolution was always the unknown, and it remains the unknown now. And then there's additional tariffs directed at steel and aluminum that likely come into effect next week. And, we're not even going to get to April yet, but seems like President Trump doesn't like GST in this country as well, even if Canadian companies are navigating with this. So if we're dealing with a long-haul situation here, whether there is some reprieve on tariffs, you said it, he wants more business located in the United States. So he's putting up a very competitive fight to businesses. Small businesses already have a tough choice on this, because if they've got one or two main customers in the U.S., what are they going to do? Close up shop or just reestablish their business in the United States? What does this mean for the economy in Canada, in your opinion?
Well, first of all, welcome to the roller coaster ride we're going to be facing, right? There's no doubt about it. Oh. But this is it, right? This is the U.S. comes in with a position of strength. Every other country right now, China, Europe, Canada, is coming in with a weakness. And therefore, they stand at a much stronger position to be able to push around all these other countries. I think the key here is going to be we have to sit down and figure out exactly what the story is going to look like, what exactly needs to be done to reduce tariffs first, and then eventually try to get them off. I think there is going to be some potential appetite to reduce tariffs. We did see the deferral, so that gives me some comfort that we can try to get a reduction in the tariff side of things. However, I think the first country to get there will be important, because I do think that sets the tone for everybody else. He does want to get a quick win off a particular country, region, and I think Canada can be that. The problem is that we do have some political uncertainty at the moment, and that's not helping our cause either.
Yeah, I've heard that too, that Canada, it's just an easy example to shine to the rest of the world. So we'll see what happens if ultimately this is a negotiating ploy. But for investors who are trying to figure out what to focus on now, we mentioned already around the world, you've seen some of the sectors that seem most immediately impacted, like autos taking a hit, or some of the clothing manufacturers, shoe makers, things like that. But tariffs, people fear, have an inflationary impact, but also there's this worry about economic growth cooling very quickly. And then how do central banks react to that? So what part of that do you watch most closely to try to determine what happens in the stock market?
We got to watch everything on that side, because everything is interconnected, right? You alluded at the beginning of the show that the Canadian dollar is stronger.
Yeah.
And you would not have expected that originally, but it means potentially that the Fed cuts rates faster. And At the same time, Canada probably will be cutting rates faster as well.
But when they cut rates in this circumstance, we're not like cheering that.
That's exactly. That means the economy is weakening, and it's a nervousness signal rather than anything else, which is why the market is not behaving well, because it's uncertain about what this means in the end. Markets hate uncertainty. For us, this is where you have to be diversified. You can't be stuck to a couple of segments of the market, because if tariffs hit those segments, they get destroyed. So I think you need to be diversified. You need to have hedges. You need to be very careful about what currency you're holding as well. So it's a really total portfolio situation you have to be very careful about. This is why it's not easy for the end investor to do it on their own. You do need professional expertise on this.
So on currency, what do you mean there?
So we're seeing the volatility on the currency side. If we continue to see more tariffs stay in for a longer period of time, and we get this additional 35 next week on the aluminum and steel, that will put pressure on the Canadian dollar. And therefore, if you're investing in the U.S., then you have some benefit off a U.S. dollar currency. So remember, the U.S. dollar is a risk aversion currency, right, as well.
And we're almost out of time, but some tech stocks are under pressure today. Like I saw, NVIDIA was taking a hit because people now are worried about the China connection as well. But there's still this long-term thesis about these growth engines. So if you're seeing big winners lose momentum quickly in the heat of the moment, what would you say to those investors?
Yeah, I think we're going to have some buying opportunities coming out of this, and I think that's what you have to always remember. We have to be long-term investors on some of these bigger dips, particularly on certain names that are key quality companies, and I highlight quality there. That's what you want to own. That's what you want to pick up in this environment. These companies are not dead overnight by any means, and they have a strong moat, and they have tied to key themes that are going to be potentially decades long. So you want to be buying on those dips.
Okay. Sadiq, thanks very much. Good to get your perspective as always. Sadiq Adatia joining us.